traders, let's have a great week. Just want to start off with a quick review. Last week's pattern and plays were very strong. Andre 3.7 in the max and Blake up 1%. Little gain there in Swiss. Nice gain in Aussie Kiwi by Blake and another winner by Andre. We have some decent patterns in play that are still active here. Aussie Kiwi Stelios does not waver. Blake caught the top of that rally in Aussie, and Grega is still short S&Ps, looking for lower numbers. In fact, I talked about S&Ps before Blake signed off on Friday, and it broke another 20 handles. And trying to bounce today, but very weak bounce considering the news that we got over the weekend about a freeze and a closing of a nuclear test site by North Korea. So S&Ps are not really celebrating it much. Let's take a look at the markets here. So I was looking for the potential of a short in US dollar yen. You know, my work is based upon RSI. It could work for at least a pullback, but to me it looks like a confirmed high on the 4-hour and the 1-hour. Okay, so to me, maybe we just pull back to here and it would have to do some work, come off, and then make a new high without confirming to the upside. I really want to congratulate and point out the unwavering analyst, which is Stelios, who's never really wavered from his count or his view that the Dixie could see 92. You know, I've been turned around a few times during all this action, and it's looking more and more likely to me that maybe Stelios was right, just to have conviction and wait for shorts up here in the dollar until we get up towards 91.5, 92. That's his line. I'm not saying the dollar can't pull back. I'm not saying it can't fail from here. I'm just giving you what the market and what I'm seeing in my charts are saying. Yeah, the dollar could pull back, but I still think they still have a lot of people stuck here. You know, not a lot of people wanting to be long the dollar. It's coming off here, but pretty good momentum on the 4-hour, over 70. A little divergence on the 1-hour, but it's still 77. Those are not ideal for me to be looking for a turn, swing turn in the dollar. Doesn't mean it can't pull back, but to me it looks like you have a 1 and you have a 2, and maybe we pull back and then we get a 3. Here's the S&P that we talked about on Friday. That Grega then has the same call here. We were trading in here before we broke down. So we'll see what the S&P can generate here. I think that it should stay under 2685 if it's going to fulfill to the low 26s, upper 25s, 2590 or so, I believe is Grega's target. And also I want to cover the gold, which I was talking to Steve Friday, and while silver was having a great week, I was saying, Steve, the weekly in gold looks like we're going to have a lower week. So until the yen is dead and done, and this type of action, you know, we were talking 109 as a possibility. In the end, maybe 110. As long as the yen is stiff, I don't have to be in a hurry to buy gold. We still could flush the weak longs that have a ton of stops under 1306. And with that, you're getting a decent candle in silver. It's been a nice little pullback from this high. We did diverge up here on the 1-hour, but I can't chase the silver here. Maybe a good break to buy, but I still think there's a possibility as long as we're staying under the Jan highs that we could even wash out further from here. So I'm going to be very interested. We have a great guest, Prashant Shah, who teaches people and has won all kinds of awards for point and figure charting on Indian markets. I know we get a lot of requests for Steve to look at the Nifty. So I'm sure Prashant was going to cover that. He's won awards for the line break technique on charts, line break chart technique. So stick around for Prashant a little later at the top of the hour. And now I'm going to turn it over to my, as Blake would say, what does he call? Colleague. Oh, my colleague, yes. My colleague, Blake Morrow, live from Scottsdale, Arizona.
Good morning, Dale.
How are you alive in Scottsdale?
I am. I was tired this morning. You know, it's one of those. I got up this morning and actually hit my alarm, which doesn't happen all that often. Usually, it's one of those situations where I get up ahead of my alarm. I start thinking about the markets, and I'll get up. Today, I actually could have slept in.
Maybe we need to change it.
Can we go back to the previous time zone, please? No, I think what it was is it was a busy weekend. We had kids with their friends over and running them all over the place.
Sport events.
Yeah, it was one of those. It was one of those weekends, but it's good to have them. I mean, it keeps us busy and keeps us alive and enjoy every moment of it. But boy, was I tired this morning.
So the dollar doesn't seem tired.
No,
the dollar. Yeah, I mean the dollar seems wide awake. What are you thinking here, bro?
Yeah, the dollar index is strong. We have broken the downtrend line. So at this point in time, you have to imagine that the dollar is the risk is now breaking higher above 91, and the 91 level is going to be key, and that's basically the euro above 122 or below 122. Excuse me. If the euro dollar breaks below 122, you know, at that point that the dollar or the euro is in trouble, and the dollar is really going to break out. I mean, this has been a keep in mind that we've been in a range, a very big range for a long time, and so. But because we've cleared that downtrend line, like I said, the risk now I think is higher, and that's and you got to be thinking that right now. It's that's the risk, and anybody who's you know, one of the things that I was just talking to I was talking to my office just a little while ago, because you know, every morning you know, I'm live with them, and we kind of talk out what we're thinking and what we're seeing here. And my 2 cents to them was, look, you know, there's a lot of people that are really positioned poorly right now in the euro dollar. You know, you have a lot of people that are long the euro. You know, 123, 124. Not, and I'm not talking about traders. I'm talking about institutional clients that are, you know, have been bullish since the beginning of the year, expecting a real big move higher towards 130, and they're probably a little nervous right now. I would assume that they're, you know, starting to get to the panic. Oh crap! What do I do? I've got a huge position in the euro dollar, and it's not looking so good. So that's kind of the thought is, you know, what happens if these you know, long side euro traders have to you know, get out of their positions. And remember, the market's very short dollars and very long euros, so you know, that's the risk right now, Dale. And I think that the euro bulls are going to try to hold on with all their might, because this is, you know, as we've pointed out, this is a you know, this is a range right now, and we have to break through that range. So I personally, I think we break down you know, but
would you be interested at your horizontal line around 21? Depending upon what it's doing, that might be enough to shake people. That's a previous breakout I see. You know, in fact, you know, I was looking to short the end, but you know, something for people to take into consideration. I don't know if you feel that way, but sometimes you get locked in on a price to do something. But it's not just the price, Blake, to me. It's how it gets to the price. right? I mean, the action into it, if it's grinding into
You bet.
support,
You
or
bet.
if it's collapsing into support.
You bet.
Okay.
Absolutely. Yeah, that definitely the price action into a key level is going to be pretty key. And you know, if we grind right into a support or resistance, then you got to be a little bit more cautious. If we're just absolutely flying into it, you know, the chances of a break, whether it's higher or lower, become much higher, in my opinion. So, but you know, and then you know, I'm also taking into account what's happening and everything else. I mean, you know, what is the biggest move right now? Do you think that's on everybody's radar at this moment in time? And I can allow for the audience to try to answer this question. What do you guys think is on everybody's mind right now? What do you think, Dale?
Oil.
Mm.
Oil, silver.
Huh? Nope.
Over to S&Ps.
Maybe a little bit.
I'm going back to the dugout. Strike three.
How about the bond market?
Oh, okay, yeah. All right, yeah.
How about the bond market? How about yeah, rates? Michael said, you know, you got the 10-year yield that's almost at 3%. That, I mean,
what I didn't want to say it, but Eric
but look at bonds. I mean, bonds have hit. You know, here's the 10-year. I mean, we are divergent right now, but we are hitting new lows. I mean, you know, divergent or not, the 10-year is hitting new lows, and the yields are rallying. I mean, that's a bit of a risk right now for the market, and you know, with borrowing costs rising, I mean, that's becoming a big risk. And this is one of the tailwinds right now that the dollar has. You got yields that are just flying. So you got to be really careful. You know, this is a risk I see in the market, is that
Steve did a measurement on that yield chart, Blake, and he came up with the flag that would take it up to about 330.
Yeah, I get you could probably do that. I mean, whoops, wait, hold on. I see what he's seeing.
Yeah.
You know,
right.
Which would be scary as all get out, but you know, however you want to draw it, you can draw like this, or regardless, this is a, you know, kind of flagging. You know, it looks. I'm sure Steve draws it something like that. You know. And that's, you know, the most common continuation pattern right there is going to be the flag pattern, and yeah, yields 330 something. Yeah. So I mean, that's pretty gnarly if that's where we're going. I mean, but if you look at bonds and you go, well, you know, God, can the 10-year go down there? Absolutely, it can. I mean, you know, how about if we trade back down to levels that we haven't seen since the financial crisis? You know, we absolutely could, and that's gonna have a, you know, impact on everything. And then also, you know, as you pointed out, tensions are de-escalating with Korea, you know, and trade to a certain extent, and so, you know. Now I don't know. Things might pick up a little bit this week with Merkel coming to town, because Donald Trump and Angela Merkel don't have like the best of relationships.
Yeah, she's going to lobby him to stay in the nuclear arrangement with Iran. And Macron, they both want him to stay in the deal.
Well, I mean, and what are they going to talk about as far as, you know, whether it's, they got a lot to talk about actually, but you know, when you start talking about trade, I mean, you know, that could really have an effect on the euro, which, you know, I talked about in the week ahead video. But regardless, the bond market is really what everybody's paying attention to, and yields got really close to 3% this morning. We're at 2.977. We've been as high as 2.993. as far as let me see, my Bloomberg chart says high be right there, you know. So I mean, it's pretty gnarly what bonds are doing. Anyway, so the euro, as we pointed out, the euro is right here, right around the 122.15. I closed half of my position. I was short the euro from over the weekend. I added some last night. I closed that out already, and I'm, we break through this 122.15, and I think we're on our way to really breaking down in the euro, and I think everybody's seeing that, and everybody's watching it very, very carefully at this point in time. The pound, this is also pretty scary looking chart here. You can see that the pound, we had such a bearish weekly candle, then we had a reversal. Pound's testing some pretty key support here. The Aussie also testing some support, possibly false breakdown. I still think we're going lower, but we have inflation data out of Australia tonight, so you're getting a little bit of a recovery at this moment. Kiwi, look at the bottom just fall out of the Kiwi. I mean, that's pretty wild price action here in the Kiwi dollar. The dollar Canadian still looks bullish. We're approaching the 38, or excuse me, 50% retracement that comes in at 128.25. I still think we can go to the underside of this, the neckline of the head and shoulder pattern that could take us to 128.60. Dollar Swiss, we had just completed the bullish triangle on the dollar Swiss. So, and I took mine off the table way early, and it really just it completely finished. The peso up near the 78% retracement. Andre had a great call on that last week. I bowed out early. He really capitalized on this move. US dollar Norwegian krona, huge move there out of the Norwegian krona. We had one of our traders in the chat room. I can't think of exactly who it was. He was, I think it was Richie, that was like, I'm going to get long the US dollar Norwegian krona. I actually ended up buying it last week. I got out of it. I traded this move right through here, and he nailed that low. It was pretty good. And US dollar Swedish krona right up against resistance here. So the dollar looks very, very constructive for bulls. It really does. And then I guess we should talk about the dollar yen. Excuse me. The dollar yen, it does look like we're going to reach up towards the underside of this broken trend line, which could take us all the way to 108.70, 108.80. I think it's possible. So you got to be careful with the dollar yen. And dollar yen looks like we can stand up there. The 127% extension of this last down move takes us to 108.90. So I think that's doable for the dollar yen. Excuse me. Sorry, I don't mean to yawn on you, but that's kind of what I'm looking at with some of these majors. But I think the dollar, if you look right now, Dale, here's the 4 hour on the dollar index. I mean, we're getting really overbought. Look at how overbought the RSI is. Yeah. So you want to overbought RSIs doesn't mean you need to necessarily short it, but I think you have to be patient as far as buying.
Might be a reason to cover longs, but not to reverse.
Right. Yeah. Like I that's one of the reasons why I took some of my euro off this morning when we were down below 30 at 122.29, is because these RSIs were getting very oversold, overbought, and like I said, I think that the euro is going down, and I think the dollar index is going higher. I just you have to be a little careful as far as how aggressive you are on new positions down here. And you said it perfectly, Dale. I don't think there's any reason to be fading it. It's just you got to be a little bit more careful with trying to establish new positions over here. So But I think this is going to be a pretty big week, you know, as far as the ECB goes. As far as the dollar goes, I think the dollar's got a lot of tailwinds behind it right now. And you know, I got asked this morning by our office, you know, we were talking, and they go, well, technically, Blake, where do you think that the dollar index can go? Because the guys that I trade with, they're more of momentum macro traders. They're not, they rely on a lot of my technical prowess, if you will. And you know, they're like, well, how far could we go here in the dollar index? And here's the dollar. Let me give you the fib levels that I'm looking at. So I was like, you know, the dollar index can reach all the way up towards 94 in the dollar index, which is the 38% retracement. You can see this, like, you know, previous support zone. This is kind of big back then, but I'm going to get rid of that. Up towards 94. You know, if we start to squeeze, and they're like, yeah, okay, what's going to take us there? I'm like, well, you know, who knows? But when the dollar starts, like, you get the dollar starting to break higher, right? And that's what we're seeing right now. Do you have any reason why the dollar is going higher, other than, you know, tensions maybe easing as far as trade tensions going, you know, yields going higher? I mean, those are all reasons why the dollar should have been going higher, and now we are. So when the dollar starts breaking out to the upside, if it does, there's going to be a narrative that follows it. You know, people are going to go, oh, well, of course the dollar is breaking out because yields are going up, or, you know, trade tensions
That's what they're going to say, Blake.
Yeah, you're gonna.
It didn't matter for a year, but now we're at a tipping point where it matters.
Right. I mean, it's like that's typical of analysts. They find a narrative that fits the price action they're seeing, and so I'm like, I don't know why the dollar could rise. I just know that we could get up to 94 pretty easily, and the reasoning could be a multitude of reasons why we're doing it, because the market's just going to find the narrative that best fits what's happening at that moment in time. So that's the thing. It cracks me up because, yeah, but you have to pay attention, though. You know, again, it doesn't matter what you think, and I have to always go back to this for myself. It doesn't matter what I think; it's what the market thinks. So, you know, I might have been saying, oh, you know, the dollar's going higher, and here it is, it's starting to break out, and now we're moving up. But, you know, what are the reasons? I don't know, whatever the reasons the market wants to point its finger at. But once the momentum starts and the market goes, well, the dollar's rallying for this, and this, then you know you're on the right side, because you've already technically gotten in because of the turn, and then the reasons that are accompanying the move, that's just going to add fuel to the fire, because then people start pointing out the more obvious, you know. So again, I don't care what the narrative is. I really don't. All I know is the dollar looks like it's breaking higher. Now if we break above 91, people are going to fit a bunch of narratives to it, and we're going to run with it. You know what I mean? Does that make sense?
It does, Blake.
Okay.
Yeah, so maybe 92. I see you have a moving average up around 92.
Yeah. This is the
fib confluence up there. That was Bell's target for a long time, 92.
That's the 200-day moving average, and you see the 24% retracement comes in right around there. Now, we're in a pretty strong downtrend in the dollar index, so that's obviously going to be a level of contention. It's a great observation, Dale. That 200-day moving average is going to be our first obstacle if we start squeezing. But I think that's a very achievable target very quickly. So what I mean by that is, if we break through 91, we could trade up to 92 the same day. That's almost a 1% move. I mean, that's a 9.08 something percent move, really quick to get up to 92. I think that could be easily achieved very quickly as the market gets squeezed. But I do think it's going to be technically a little bit of an issue, because it is the 200-day moving average. It is the 24% retracement. But I think we can clear that. You know, I think that could be a fairly easy obstacle to get above. Again, you know, what's the reason why it's going up there? You know, what narrative is fit to the move, and is it enough to push everybody in, or, you know, get everybody out of their euro longs? You know, I think it possibly could be. So, yeah, I'm interested to hear what Steve has to say about precious metals, because if the dollar is moving higher and we're squeezing higher in the dollar, what's going to happen to precious metals? So I'm going to leave that to Steve, and I'm not sure if Stelios is here this week because he is in London, so I'm not sure if he's going to be tuning in. But Steve, good morning.
Good morning, Blake.
How you doing?
How was the weekend, mate?
I'm good. I'm just good. Just tired. I'm kind of tired today. Is Stelios coming in this week?
Yeah, he will be joining us, but not every day, because, you know, he has a schedule there.
Yeah, he's traveling, of course.
Of his visit, but he's going to be with us some of the days for sure.
Oh, good. So I think I'd like to hear your take on the precious metals here, and how do you feel if the dollar does indeed continue to squeeze higher? What are you thinking here? Hello?
Since we're talking about, hey, mate.
Oh, I lost you there, Blake, for a second. Yep.
Okay. So, you know, the inverse correlation is always going to be there. Since, you know, we're talking about metals denominated in dollars, but this is not the only thing that has been moving metals, and, you know, we still haven't seen. I mean, the vast majority of the metals are still holding important resistances, and you know, we need to see what's going to happen. We didn't get bullish breaks due to dollar strength coming through the market, but on the other hand, we still haven't seen any breakdowns. So, for example, gold has fallen back in the triangle. It never actually broke up in a daily closing basis. Silver is also still holding. Hasn't broken above this, you know, long-term triangle. It's more or less in the middle of it. Palladium is pulling back from the 61.8. Actually sliced through 1,000, you know, like it wasn't even there. But I think you know, there's no question that Palladium, you know, remains bullish since it's been holding this very long-term uptrend. So I think that, yeah, metals are suffering, but for the time being, you know, we don't have any confirmation that the trend has actually changed to a bearish one.
So what would if the dollar index starts really breaking out above, like, let's say 91, that's really going to alter the view of precious metals, probably?
Probably yes. But you know, I know that you have a different trend line. I'm also monitoring this trend line here in the DXY. You know, that comes from the high, and, you know, passes a little bit higher, but definitely 91 is a key
91.
level.
91 is a breakdown point from
yeah.
91
was the low in September. It was also the high we found in the first day of March. So yeah, definitely 91 is going to be a key level, and probably the dollar is going to squeeze higher if we break above it. I'm 100% in agreement with you on that. But on the other hand, you know, I was saying early, you were still sleeping because it was quite early hours. It was during European hours. I was saying to the chat room that this is one of the very few days I can remember that so many dollar-denominated tickers are currently testing key levels. For example, the Kiwi is testing triple confluence of supports. It's the 38.2 of the move higher. It's the 200 DMA. It's also the ranges bottom, right? Aussie USD also testing triple confluence of supports at 76.40. USD CAD is testing major resistance at the 128 area. The Euro USD is testing triangle support. USD NOK, you mentioned before USD NOK, in my opinion, although the chances are high, USD NOK has not broken to the upside because this is the triangle I was monitoring. And we are currently testing double confluence. It's the triangle's resistance. It's also horizontal area of support resistance. So, so many dollar pairs are actually in, on the levels that, make it or break it levels in essence, right?
Right.
So they either do the move today or they get rejected from here. So I think that this week, one way or another, is going to be a very interesting week, right?
Yeah, very, very much so. Very much so. So, all right. Well, I got to get over to trading. So, Steve, thanks for being here, and Dale, thank you for being here as always. And I want to wish everybody a great trading session today.
See you later,
Blake. Blake.
Right. Thanks, guys.
Hi, Steve.
Bye, mate. Hey, Dale. How was the weekend, mate?
Good.
I'm good.
Good. So yeah, already nice.
Did you enjoy yourself?
It's interesting when we're at these make and break levels across the board. It's
yeah, almost across the board.
Actually, it's a major inflection point, possibly.
It is. It is actually. It is. So I do think that it's still, technically speaking, not impossible to see continuation lower for the dollar from here. But definitely, we've gotten very, very close to the part that people that are short the dollar, and we know that since a long time ago, those have been a lot of them. I mean, the majority is obviously short the dollar, and it makes sense. I mean, since the first days of 2017, the dollar has only been moving lower, with the exception of few periods of more or less, consolidative of price action that was more or less consolidation. You can even call them soft corrections, right? So we know that the crowd is short the dollar. We know that the crowd is also the sentiment is also being bearish.
You think a move to 92 in the Dixie would alleviate some of that crowded trade? Would it be enough, you think?
You know something? I believe that, given that the sentiment and positioning are one-sided, probably if we make it up to 92, it's not going to be easy to, put back the genie in the bottle. You know what I mean?
Okay.
I mean, once the market starts getting scared that actually something is happening with the dollar, and they've been positioned, in a bad way, being short, for example, at wrong prices or whatever, I think that then it might become like a self-fulfilling prophecy. I mean, people that have been short for a long time, for investors that have been positioned, since early days will be taking profits likely. Other people that have been positioned poorly, meaning that they were short at bad prices, are going to be getting scared and squeezed off. So to be perfectly honest, I think that if we break above 92, 92 and a half is also the 61.8 of the last move lower. It will also mean that we will have broken below this descending trend line resistance. Probably then we will be talking about a stronger rebound. Yeah, it is likely actually. Yeah, 94, 95.
So
yeah,
if
exactly.
the market achieves another 100 points, it most likely leads to the squeeze continuing with a breakout over that long-term downtrend to really get people to capitulate and turn bullish the dollar, probably.
Likely.
And maybe the 10-year is at our target by then that you came up with, and Blake showed again today at 336, and then that's the end of the dollar rally, and maybe the end of wave 5 down in the bonds.
Yeah, can be. Yeah, can be. Speaking of the DXY and the 92 area, 92 area is definitely an area of interest because more or less it's a triple confluence of resistances there. I mean, depends on how you draw it. It's this descending trend line that comes more or less there. It's also this potential. I mean, we can view this move so far as a bear flag, so that flag's resistance also comes around there. And the 200 daily moving average, as you see, it's currently at 92.05, but obviously it keeps coming lower by the day, which means that within a couple of days that should also be at the 92 area, making definitely the 92 area an area of importance. And Blake said one thing with which one of the things which I agree, because you said many things, and I agree with most of them, and that is that if we break above 91, we might get a very big squeeze that might get us up to 92 very, very fast, even within a day, right? And I do agree with that. So, it's, the levels are very clear here. 91, a critical level. We haven't managed to break above 91 since, what was it here? Let me see. It was the very beginning of the year, actually, more or less. And it's also an area that has acted as support prior to that. More or less the 38.2 is there. So 91 definitely critical area. Now, once we break that, 92 should come soon. And if we do break above 92, as I told you before, I think that it's going to be probably too late then to contain whatever is coming after that, right? So, very clearly defined levels to watch here in the DXY. Definitely, we know that a major component of the DXY is the Euro USD. The fact that the Euro USD is currently testing this triangle's support. At the same time, this is also a level that produced, on a daily closing basis at least, lows at the beginning of April. It also produced, in the middle of March, a low here as well. It had also produced a low at some point in February. We only managed to penetrate through it like for a little bit more than 24 hours at the end of February. So definitely, an area we should be watching. And I do think that if we break below here, that might lead to more euro weakness. And euro weakness definitely by default means DXY strength, right? I mean, theoretically speaking, if the euro is tanking against the USD, even if almost every other USD pair is behaving in an opposite manner, which isn't possible, but I'm just giving an extreme, still the DXY should be creeping higher. If you also take into account the fact that after Carney's statements last week, the pound, like the bottom fell off the pound because the market suddenly had to completely reprice the hike probabilities at the next meeting. Cable and euro in combination. And by the way, I have to say that cable today is threatening to actually post a lower low after a long time, and this is going to be the 5th consecutive down day, right? Which shows, that we have some change of behavior here. This was another rejection from the 78.6. If somebody also wants to see it in an intraday basis, since we broke actually the previous high that we had at the end of January, somebody can also see this as a false break higher, or anyhow, you can even, some people I believe already are considering the possibility of a double top. So, euro and cable look like they could start unraveling from here. So this is a major threat. But I need to reiterate what I said. Oh, hey. Welcome. Hey.
Sorry to interrupt. Hi, everybody. I just wanted to add one thing. Cable is indeed looking quite weak. The thing to note is that this is mostly dollar strength. I mean, obviously, sterling got hit after Carney's
statement, yeah.
Yes, but the thing to remember is that the market was pricing a very, very shallow hiking path. So they were pricing a very good chance of May, like over 80%. But then the next one was priced in, yeah, less than that. But the next one was like in 2019. So what's happening is they're moving the chances from May to like August or maybe even November. Obviously, it's not good for the pound, but the main move has been the dollar, and you can see that by the fact that the euro sterling is only up like 25 pips since Carney, so hasn't done as much. So I think it's cable in particular is combination of Carney, obviously, but mostly dollar strength, and the dollar has been ripping, like you said.
Yeah,
and also one more thing. I don't know if the people who have been watching the webinars on a regular basis will remember that the DXY chart I always start with when I'm showing my stuff has a very long-term zone which goes from 92 to 93, and that zone I think is going to be huge. I agree with what you said.
I talked about your unwavering call for 92 today, still.
Oh, good. Okay, I just joined about 10 minutes ago, so I missed it. But yeah, I think the chance of a bounce towards 92 is quite big, and we've been saying this for weeks now.
Yeah, 92, a very major level. 92 and a half also has some confluence of resistances. But if we do break above there, I think that the DXY is not going to stop. I mean, probably the rebound is going to extend from there just by positionings that will be getting squared off. I think that should be enough to then push the DXY, at least a decent percentage higher. So I do think that, this week, at least, I mean, we finished last week finally seeing some volatility due, mostly due, as you mentioned, to the dollar strengthening. And the week seems to be starting. I would also want to see a completed US session, because many times we've seen during US hours reversing some of the European moves. But if we do close the day with the dollar being strong, I do think that this week has the potential of being quite an important one. I mean, one that is actually gonna finally get things moving once again, at least on the FX planet, right? So yeah, I do think that this week is going to be a very interesting one to watch, and probably an interesting one to trade as well.
Absolutely.
Okay, so now having to do with I very briefly covered, like most of the percent I showed you here, how the vast majority of the USD pairs seem to be either on resistance or support. Depends on which side the USD is. Having to do with the cable, by the way, since we were talking about the cable, for me, a very, very, very critical area remains this one. This one here, right? This ascending channel has acted multiple times as resistance. After we broke out from it, it also acted already once as support. I think that this area, which also now coincides with that low there, roughly, let's call it 138, 138.80. That's going to be the one that defines the trend. I think that if we do actually break below there, but it's too soon, I'm just saying if, then we can be talking about the potential of a double top or a false breakout, or no matter how you want to see it, and then a potential of a much larger move to the downside, even potentially of the end of a long-term correction to the upside, because I remind you that we have no reason to be viewing the move higher as anything more than a long-term correction to a undeniably bearish trend, to an undeniably bearish trend, right? I mean, there is no question that the cable has been in a bearish trend. Just remember that in the summer of 2014 we were trading at 171.70, right? So obviously the move from 171.70 down to 119 is a very strong one. Also followed a period of long-term consolidation that came after another huge move to the downside. I mean, back in 2007, the pound was trading above 2.1. Then it came down to 135. Then we had a very long period of consolidation. Then we had one more leg to the downside, rinse and repeat. So, but for all of that to come into fruition, we definitely need to start by seeing a break below this ascending, the broken ascending channels resistance that can easily act as support once again. Anyhow, let's go back to have a look at a few more pairs. Let me say something briefly about the USD yen as well. The USD yen, I was saying that last week, was facing an area of resistance. It's actually now breaking above it. It was the 38.2. It's also this horizontal area of support resistance. You can see it has acted as support multiple times in the past. It also acted as resistance a couple of times. And, we now seem to be breaking above it. And the next area, as we had indicated, is the 105 area. I haven't turned bullish the USD yen yet in any way. But those of you that are watching, that it comes as no surprise the fact that we're pushing to the upside once again. The question is what happens from the 109 area. I think that might be a very critical area for the pair. If we get rejected from there, we remain bearish. I mean, we cannot deny the importance of breaking down below this long-term trend line. You can see it here, and we have broken down below it. So, this might simply be a corrective move to the upside before a continuation lower. Okay, so I have no position here, but definitely I'm still monitoring USD yen, and if I do see it getting rejected from up there, I will, I will more or less tend to believe that this is a real move. Let's have a look at risk assets as well. Mainly, of course, as always, S&P is the most important. We've seen a couple of days of weakness, but really that hasn't changed much. That hasn't changed much. Our view, I mean, we remain within a triangle here, and I do think that more price action is going to be needed for us to determine if this was simply a correction in time through this triangle, if there is one more leg missing to the downside for for it to become something like an ABC, or if it's something more complex. But regardless, I think that a break higher from from this triangle for the SPX is definitely going to be a major bullish development, but it hasn't transpired, it hasn't happened yet. So I more or less remain neutral. I was long. I got stopped out on Friday at break even, so I don't even have a position anymore. It was a good opportunity. Didn't work out. I didn't lose anything, so it really doesn't matter much. It might even have stopped me out and move higher from here, because definitely this was an area of support, all around 2660, 2665. I just, since I don't have high conviction, I didn't want to risk getting into a loss because, I want to be risking losing money when I actually have high conviction, and in this case I didn't. Otherwise I would have, given it more space, but I simply didn't want to do that. So I think this week might shape this up as well. Now, other indices have already broken higher. For example, the Dow Jones seems to have been broken higher. The Nasdaq is in the middle of an ascending channel, but it's still, it's the only one that actually managed to post a higher high back then here in the middle of March. The IWM, if you have a look at it, is also within a triangle, and now Nikkei is once again consolidating. It has broken a major resistance. This consolidation, for the time being, I have to say that it definitely doesn't look bearish one. It looks more like a flag. Here is the DAX, same deal. It broke above this this trend line, and it came down. It retested it today, but for me, this little 3-4 day move looks like consolidation as well. So another push to the upside to test the 61.8, and this horizontal area of resistance doesn't seem unlikely at all. And the FTSE as well, we can have a look at it here. FTSE is also being helped by the fact that the cable has weakened. So the FTSE started showing strength despite cable being strong, and obviously cable depreciating during the past 5 trading days has definitely helped it push even higher. It's currently almost at the 200 daily moving average. The next confluence of resistances is a little bit higher at 74.30, 74.40. I think it's likely it's going to make it to there. And I would want to see what kind of a move lower it's going to produce. I mean, if I see a push higher there, then a rejection, but I see the move lower being a corrective one, I think that then we can be more easily talking about having found a low here and looking here and looking for long opportunities. So as I said, a few more days of price action is going to help a lot with us getting a better idea of in which direction the next moves are going to unfold to. Let me open the question box and see what people want to ask for, and we take it from there. We will soon have dollar weakness, Rayo says. It is likely. We still haven't broken higher in the dollar. I mean, in levels that actually indicate, that the trend has changed. So yeah, it can happen. Oil, yeah, a question about crude. Thank you for reminding me. We haven't had a look at it. I have to tell you that so far crude doesn't look like horizontal area of support resistance. Let's call it roughly 66.30 to 66.40. I think that we can remain bullish, right? Now, if we break down below there and we start showing some momentum, then the conversation changes. But so far, the indications that this was a major high are, oh, okay. I think Grega is going to be joining us, from what I see. Yeah. Okay, Grega might be joining us actually in 3 minutes. He just wrote to me. So, okay, we can have Grega answer some of the questions as well. So, I think that as long as crude remains above this 66.30, 66.40 area, we have no reason to jump the gun, right? So I would remain bullish crude unless we show a break down below that level with, some acceleration of the downside momentum. Okay. Let me see what other USDs are on the. Hey, Grega, welcome to the party, mate.
Am I too late?
It's never too late to hear your voice. Definitely, we don't have much time. Dale, do you have an interview for today, actually? Dale? Anyhow, Grega, we were just saying with Blake that many USD pairs are currently at major resistance support areas, and definitely we know that 91 is an important level for the DXY as well. So the question is, has your view shifted? I mean, do you see the dollar's strength being rejected once again from here, or you see something different brewing in this occasion? And I don't know.
Are you there? Something is lagging. Steve? Steve, Dale, are you there?
If you want to choose some specific pairs to show, yes, mate, I'm here.
Yes, something.
Can you hear me, Grega?
Yes, I didn't hear you, so something was lagging probably.
Okay.
Are you there?
So, what do you think? Yeah, I'm here.
Oh, okay.
So,
has
your view changed?
No, actually, I think there's still very important levels are now being tested, and since it's Sunday, I would not trust this breakout just yet. I would wait and potentially watch out for reversal signs, because for my career, I noticed that Mondays, a lot of Mondays are going to be fake flows compared to the rest of the week. So I would not be surprised if we see some rejection to the downside. However, we passed this swing high, so maybe this wave 4 is still going to be more complex, but the idea is that we are trading below this trend line connected from 2017 highs, so we definitely cannot turn bullish just yet. I would need to see some decisive break to the upside above this level, above this trend line, probably with a weekly close above it to confirm a trend, a change in trend. So until then, I still see this as a wave 4, but maybe just some other shape than a triangle, but still can be a corrective bounce. So with that said, euro dollar is also at this major trend line support. Actually, I don't have it here, but it's right there. Okay, so actually we are at the lower side of this trading channel, and I am considering potential bounce here and then even push higher for wave 5 to a new high. So as I said, do or die levels are here. and on the 4-hour chart, actually, there is still this valid triangle formation. Now we are at the lower side of the range. So if we consider that actually euro dollar is trapped in a range since what? Since start of the year, actually, for me, it's just too soon to call any significant breakdown just yet, because simply it's not happening. Okay, we have seen. Yes.
I was saying the exact same thing. I was also showing Aussie USD on major support, Kiwi on major support, USD NOK at major resistance,
Yes.
etc., etc. So I'm seeing the same thing. The question is, let's assume for a second, let's just work on the theory that we don't see a reversal today in the dollar and it actually pushes higher from here. So these major levels do break. Would that make you bullish the dollar for just a very short period of time, seeing, as you said, a little bit of a more complex fourth wave rebound? And how do you think that would unfold as an alternative count? Or you think that might indicate that we found a major low in the dollar?
Look, as you know, I'm tracking this 5 wave of recovery on euro dollar since start of 2017, and we are definitely approaching these final stages of this trend. So I think that sooner or later we will see a reversal. I'm expecting it, but sub waves are also important. So at this stage, as I said, we don't have this confirmation yet that the top is in place, but if we see a break below this trendline support, and if we see an overlap with this wave 1, okay, then definitely I would say that wave 5 completed larger degree wave C, and in such case I would be looking much lower here, because as you know, I'm looking this to be an expanded flat correction. So I still am waiting on this top on significant evidences that we have a top in place, but then once we get it, definitely I would be looking for larger 3-wave fall minimum, but ideally even a 5-wave decline. And okay. So based on minimum expectation.
So is that around, Greg, excuse me, is that around 120 in euro? The line in the sand?
For confirmation, yes, it's 1.1960 actually, around there. Okay. Because that was high of wave 1. So as you know, if we break this level, if we make an overlap, then at the same time we would be already well below this trendline support. So we would have two evidences at the same time actually that we are topping out. But at this stage we are at the do or die level, so definitely for me it would be too soon, because we could easily, if market is trading in a range, then what you expect until the breakout occurs, you expect that market could go to the other side of the range. So this is not an impulsive structure, which means I would stay with this type of a price action until the breakout occurs.
What about the S&P? I mean, it's still trapped in potentially. I'm still viewing it as potentially as a triangle. Yeah, there can be another leg to the downside, but do you have some?
Actually, yeah. S&P 500 is very interesting from two perspectives. I have 2 wave counts, and both suggested the same last week. The first wave count, the primary count, suggests that we are going to see a 5-wave drop down for a wave C. Okay, and the reason is because we still can see a drop below February lows. If we consider that wave C in a zigzag will probably always finish somewhere below that level. So we may see even an extension down for a wave C towards 50% of wave 3 before this correction can be finished. Now, this is my primary interpretation. The other one, as I said, is a triangle. Okay, and here we have A, B, C, D, and E. And even here, last week, I expected a reversal. Why? Because I assumed that based on 2 wave counts, we should see at least minimum drop towards maybe 2600 level for wave E, even if this is a triangle. So based on these fib levels on a shorter term chart, I noticed that this 61.8% held very well here around 27.10, and then also here I have this triangle fib levels where I see also 61.8%, but not of this move, of this decline from March highs, but it's actually taken from this rise, okay, from February lows up to March highs, okay? So this is a projection of 61.8% of this leg. So based on triangle count, based on a very bearish count for a wave C drop, in both cases, we turned down from very nice fib levels. So I think that there is a chance that we will see at least wave E down towards this support. There's potentially even some gap here from April 09. So I would watch out also for this market to move towards the lower side of a range, at least towards this level. But there is a chance that we will see much lower prices here for a wave C. Okay, so in both cases, I think that there is room for more downside. Also, here I see waves 1, 2, 3, 4, 5. Also notice that this wave 4 on Friday actually found perfect resistance at this trend line. So I see this intraday structure are pointing to the downside. So definitely I will be looking for much lower levels. And we are also short, as you know, with the PIP since Friday. So I'm looking for this to continue to move in our favor. Also, at the moment, I see nice ABC run up unfolding. Normally, this will take us back to the area of a former wave 4. So that's the level, that's the zone actually, where I would expect a reversal. Also, 50 and 61.8% is a perfect Fibonacci retracement levels for a wave ABC rise. So with this said, I think that the Japanese yen could still see gains, especially against commodity currencies, which are acting very weak. So I would watch out New Zealand dollar against the Japanese yen, Aussie yen, also very interesting for more downside.
Yeah, they got, especially the Kiwi yen, at least from my perspective, Grega, got rejected from a very nice confluence of resistances. It was actually the 61.8 of the previous move lower. It was also the 200 DMA, and it was in general that area, the 79.40 area, which we never closed above it, was a nice horizontal area of support resistance. We had seen many highs and lows there. So yes. So I do think that the rejection, and don't forget that we also printed a bearish engulfing on the weekly chart. So everything in the Kiwi yen points to a very nice rejection. I'm in agreement.
And also on the S&P, I forgot to mention that we had last week. Just a second. Technical.
Just to remind you guys, Prashant is here for the interview.
Okay.
Yeah, absolutely.
So here we actually had this
evening star formation.
Yes. Body up, doji, body down, and confirmation was actually on Friday when we broke this low from Thursday. So actually, I would not be surprised to see, at least as I said, pull back to the downside, maybe based on this moving average, 200 moving average could be retested.
Good point.
And
good point.
We are turning from the upper side of this range.
Anything quickly on gold and silver, Grega, before we go to the interview?
Yes, if we continue to see weakness on stocks, I still think that gold could find the support. We are now at this approaching this trend line. I still see this as a consolidation. Clearly, I cannot count this any impulsive from the highs. So I think it's just a pause with a still ongoing uptrend that may continue from 2016 lows. And ideally, we will see a spike above these 2016 highs before we may see a bearish turn. So for the near term, watch out for this trendline support to hold and maybe send prices from the lower side of the range towards the upper side.
My upside target for gold, Grega, is the 161.8 of the triangle's maximum range, which comes at 1,405, by the way. So more or less it coincides with what you're looking for there.
Yes, you are watching too much of my Elliott wave charts.
Actually, I try not to, so I don't get biased. But yeah, we do agree many times. I have to totally give you that.
That's
Thank
good.
you, guys.
Thank you. Thank you,
Thank you,
guys.
Dale.
Thank you,
Bye-bye.
Shant. I see you, and I'm going to make you the presenter. Looking forward to talking to you. Thank you for joining us today. So I've just passed you the baton for the relay race, and looking forward to hearing your voice and seeing your screen. Everybody, this
Hello.
is Prashant Shaw. Hi,
Yeah.
Prashant. How are you?
I'm good. How are you?
Good. Thank you so much for taking the time to edify our
Thank you so much.
community with what I consider to be a lost art, the point and figure way. So
Yeah.
I appreciate you being with us. I've read your bio and all the accreditations you have, CMT, CFDE, and
Yeah.
you won an award for your line break charts. Can you tell me and our audience a little bit about how you got involved in the business, in the trading business, educator business, in the markets? Were you an engineer first?
All right. First of all, thank you very much for giving me the opportunity to present the subject here. Now, I'll give a brief background about myself. I entered into this business, I think, about 15 years back. I joined a broking firm. I started as a executive, opening accounts, selling Demat and all that.
Right.
And there onwards, I got an it. I used to meet so many clients in order to, because my job was to bring clients and open accounts, Demat accounts. So I used to meet traders, and I saw that people using technical analysis, using this price analysis, and doing some interesting things. I got attracted to it. So then I started looking charts, read books, and started giving those exams while working. And then I got very much interested in price analysis when I got benefited in the fall of 2008. So I thought, that worked. So I thought, yeah, there's something in. We should get more into price analysis. That's something which is in a way leading indicator. And then I came across this point and figure chart when I read Jeremy Duplessis' book while giving exam. Then I read Thomas Dorsey and many other authors and learned this subject.
Okay. What was the name of that author again, please? On the point and figure book you read?
Sorry?
The name of the author of the point and figure book that influenced you?
Jeremy Duplessis.
Okay.
His book is The Definitive Guide on Point and Figure Charts.
Okay.
So that's the book. And another book from Thomas Dorsey, Point and Figure Charts. These are the two books which I would recommend anyone to, who is interested in price analysis. That's where I learned about these charts and I started trading them. I am trading these point and figure charts on Indian markets since last about 10 years now.
Okay.
And on all time frames.
Because, I used to see a lot of people do it by hand on the floor, Prashant, and, I've interviewed close to 1,000 people, and you're probably, maybe there's been one or two other people that have adopted using point and figure for, not just short-term stuff like floor traders would use, but longer-term analysis, and it's pretty unique that you gravitated towards this type of analysis. So why don't you go ahead? Looks like you prepared some type of PowerPoint for us, so I'm going to let you go with it and strut your stuff and show us what you got.
Yeah. So actually the point and figure charts, the most important thing is just one dimension price analysis. And here I've prepared one slide where I'll explain in very brief how I read the patterns on P&F and how they are being built. It is applicable on all instruments, all time frames. Once you learn the principle, you can apply it on different instruments and time frames.
Okay, so point and figure bottom line, works on anything. The only difference is beta, leverage, and the title.
Right. Absolutely.
Okay.
Yeah.
Okay.
So yeah. So I'll just explain in very brief what this point and figure is. Like we are used to the usual charts like candlestick, bar charts. They move horizontally when you get candle on. If I'm looking at a daily chart, I get to see a candle on a daily basis. So those charts move when time passes by. But in point and figure chart, these are the charts get plotted only when price moves. So there's just one dimension that we consider in point and figure chart. So
Okay,
they move.
good. Okay, that's a big point that I really think about. When we're looking at the point and figure charts are not based on time periods like a daily candle. They're only based upon an X and an O when price change, and that could be a couple times in a day, or it could be before you get another mark in the box, right?
That's right. That's right.
Okay.
So for example, now this is if an instrument is trading at 100, the point and figure chart is they move vertically, they move in columns. Now here, if price has moved from 100 to 125, we write it in one column. It is going up. Notice that the value of this box is 5 points. It could be any other. I mean, 5. We'll discuss what should be the value, box value of in case of any instrument. But here, in this example, it is 5. So price has moved from 100 to 105, then 110. We have written in that column as and when price has moved by 5 points. And when price changes the direction, let's say it was at 125, it went below 120, changes the direction, we change the column and write it in the next column. Right. And again, it starts going up, we write it in the next column.
Got it.
So this is how the charts. I mean, this is a very old method of doing this. So these were the charts known as figure charts. But then there were the times when there were no computers. People used to maintain it manually.
That's what I used to see. Yeah, people would do it by hand.
Yeah. So then
on an index card.
Yeah, absolutely. So then they started a method. So someone thought, why not to prepare an index at the left-hand side, and instead of writing figure every time, you can just point it. So that's how they were known as point charts. And this point system was random. So someone used to point it. People started using cross marks. Eventually, that cross mark became X. So it is the same chart, but there is an index on left-hand side, and every time the marking has happened. Then the problem with these charts were that every time you only see this X mark, you don't know whether price is going up or down in that particular column. So then the solution was, when it is going up, you use cross mark. When it is coming down, you use circle. Eventually that cross mark became X, that circle became O. So now today, this is how the point and figure charts has been plotted. When price goes up in one particular column, let's say from 100 to 125, we write it in the column of X. When it is falling down, we write it in the column of O.
Got it.
Right? So this is how these charts are being plotted.
Great visuals for this. Okay, go ahead.
Okay. So now, while plotting these charts, you have to determine two important things. One is the value of this box, and with the reversal value. I mean, when the chart will change the column. So usually and traditionally, which is or widely followed point and figure charts are 3-box reversal charts. So from 125, price will change the column only if reverses by 3 boxes. So in this example, reversal 1 is 120, second is 115, third is 110. So if price goes below 110, then the column will get changed. And the box value is 5, so these are known as 5 into 3 point and figure chart. Now, important is these 5, 10, 1 are absolute values. When you use any instrument, it is very difficult to determine these absolute values. So the solution is log box value. If you use log box value of a chart, you can see over a time, because price moves in a wide range, it goes to 100, it goes to 200. And if I'm using same absolute box value, it doesn't make any sense. So then we can use log box value. So like 1%, if I use 1% log box value, 1% into 3 point and figure chart. So if price goes up by 1%, we write X. again it goes up by 1%, we write another X. And it changes the direction by 3 boxes, that is 3%, then we change the column. So that's how the log box value P and F charts are being formed. I hope this gives you an idea.
Okay, so in log boxes, you're using percentage moves instead of just a value like the 100, 105, 110.
Correct.
All right.
Correct. So now, if I talk about very basic patterns that you can read on any point and figure chart, this is known as a double top buy pattern. When any column of X goes up above its previous column of X, whenever it forms one X above the highest point of previous X, it is known as double top buy pattern. Right. So this is very objective pattern in nature. I mean, once this box, we get this box, it is a double top buy pattern. So in point and figure chart, you get a column of O after X and then a column of X after O. If you compare any column of X with its previous column of X, either it will be a double top buy or not. If it is above previous column of X, it is a double top buy. If it is not above previous column of X, it is not a double top buy. So it is as objective as that. And you get the double top buy at this box price might go up from that level, but it is triggered here. So I hope you have understood what is double top buy pattern, right?
Yes.
Yes.
So you're like buying a breakout and taking out a previous X.
Got it.
Got it.
Yeah. Yeah. Exactly opposite of double top buy is double bottom sell. So when any column of O falls below the lowest point of previous column of O, it is a double bottom sell.
Okay. It's the inverse of what we just saw.
Yeah. So it is opposite of this. So now this is USD JPY. If you notice the box value, it is 0.15%. The reversal is 3. This is from September 2017 to May 2015. This is a short-term chart of USD JPY. You can notice the markers where I have marked double top buy and double bottom sell patterns. Whenever any column of X has gone above previous column of X, I have marked double top buy and double bottom sell formation.
And you rarely, it looks like you hardly ever had a drawdown on these signals. That once they went, they just kept going. If there was no reaction, they were all breakouts or breakdowns that just kept going without any failed signals. Do you have any failed signals on this at all?
Absolutely. So this is a simple breakout system. If you notice, it is a price breakout. This double top is nothing but a swing breakout system. So it is as like we see a swing breakout in normal chart. That's how it's actually the same. Number one. Number two. So it has also got period of whipsaws. But the important thing that one can understand, because of nature of point and figure chart, it moves vertically. It ignores any data where there is a price consolidation, when price is not actually moving. So that period of consolidation is something which is not taken into account while plotting this chart itself. So we will have whipsaws, but it is comparatively lesser than the usual swing breakout system. That's what I have found. Number one. Number two, we trade only based on this breakout. So for example, if I'm using a simple double top and double bottom system, though there is very much more in point and figure charts to read. But even if I look at this basic methods, if the buy has come here, there is first sell signal that has come here. Now, I don't want to present this as a simple buy and sell system, but this is a simple way of looking at the price breakouts in an objective manner.
Let me ask you this, Prashant. Is there any way, like when you have these signals, that point and figure projects a target or objective, or do you just wait until X's turn into O's or O's into X's to exit a trade?
Yeah. So now this is about price pattern. I take this further. Just before, I also want to discuss, we also do trend analysis and vertical counts on this. So I'll explain how to do it in a while. But understand one more thing: if this is a point and figure chart, and if you are here, you can know that if it moves above 2000, there will be a double top buy formation get triggered. Once it gets triggered, you always know when the double bottom sell formation will get triggered, so you can know your pattern levels in advance.
Okay.
All right. So, and from trading perspective, I have another thing, particularly when someone trades multiple instruments, like I trade futures in Indian market. And if I determine when I want to trade a particular double top buy or not, one of the important aspect is the affordability. Like if this is also a double top buy, this is also a double top buy. But look, if I buy here, I will exit on the double bottom sell. So this gives me the idea of initial risk that I can take. So the affordability predefined risk is what you always know before taking a trade. All right. So I explained the price pattern on point and figure chart. There's something called as 45-degree trend lines on these charts, which are objective in nature. While plot the 45-degree line, as you know, it is like this is a box where the height and the width of the box is same. You can draw 45-degree trend line from them. And when you can draw such 45-degree trend lines on point and figure chart, we draw it from important bottoms and tops. So once you draw it from bottom, if this is a significant bottom, you draw it from here. This is a significant top, you draw it from there. So once a price is above 45-degree trend line, it is bullish. If it is below 45-degree trend line, it is bearish.
So right now, the U.S. dollar yen chart that you have up right now, that you had up right now with the trend line, actually has potential to move to a bit above 110.
Exactly. So now, see, this is a current chart of USD/JPY, and now this is well below the 45-degree trend line plotted from the top. Now, what is the importance of 45-degree trend line? Let me just explain in very brief. In order to maintain 45-degree trend line, like price will, if price will go above this 45-degree trend line only when the number of X will be more than number of O from this top. Same way, price will breach 45-degree bullish trend lines the moment number of O's will start printing more than number of X from this bottom. So it shows us the strength or weakness of the top or bottom from which we have drawn that 45-degree trend line. Now, currently, it is trading well below that 45-degree trend line from the top. So there is a weakness overall on the medium-term charts. In the short-term charts, in the very short term, we can see this, the 2x, the resistance at this 2x at this level, and the price has broken out from there.
Nice.
Known as top buy pattern, which is again very objective. So I'll also show it to you on this chart. So you can see this. Now these are the 2x where price has taken resistance and now it has broken up. So this is a downtrend overall, but there is a breakout in the short term. This breakout will fail only if price moves below this point, this column of O. Unless and until that happens, right now your short-term chart is bullish, though it is trading well below the 45-degree line.
Okay. Very nice.
Yeah, and third point that I wanted to discuss is counts that we have in point and figure charts. Like you can extend this column of X upwards, the column of O downwards. The formula of doing it is whenever, now for example, if this is the column of O, we calculate the length of this column of O, like number of boxes in this O, multiplied by box value and reversal value, and deduct it from the highest point, which is the next the highest point of previous column of X, and if you project it downwards, it will show you this vertical counts. So this actually extends the strength of the column. So and this cannot be plotted from any column of X. There are certain rules to plot this vertical count from any column, and the simple rules are you can plot it from the top and bottom. Now, how do you define top and bottom? Whenever there is a buy signal, turn to sell signal, this is particularly your this is your top. You can plot it from the immediate column of O from your top, or the immediate column of X from your bottom. So right now you can see you can plot it from here because there was a bottom and then the column of X, price has moved about it. So these counts in short term are active at this point in time in USD/JPY.
So we're getting a question from the community. Can we use vertical counts in currencies? Have you experimented in currencies with this? Well, yeah, you're talking about the yen right here, so of course you could. So
Yes,
your
so I'm
vertical count in the yen is 108.69 and then 110.66. So that, there you
yeah.
go, Krishna. That was from Krishna Kumar.
Okay.
Asking you that. Okay.
Yeah. So yes, you can. Yeah.
All right. What a great tutorial in point figure. Are you? Do you have any more slides to share with us?
All right. So these were the So these are the important things: pattern, trend, and count. When they are in sync, you can trade the charts, whether it is currency, commodities, crude oil, or any other chart for that matter. I trade Indian markets using this, and on all segments. So these are the books that I recommend if someone is interested. And even I have written a book on this subject, which explains everything right from the basics to the method of investments and trading using point and figure charts.
Buy his book. Do you want to show your website?
Yeah.
DefineEdge.com?
Yeah. So my website is defineedge.com. And if you go to the section of videos, there are many videos that I have recorded, which explains point and figure chart, the method of construction, the method of counts, and how you do such analysis and all those things.
What a great presentation, Prashant. I want to thank you so much. You know, one thing I could say for sure after listening to you, X's and O's are more than tic-tac-toe. What do you think? You like that?
Yeah, you gave me a tagline for my son.
All right, yeah, go ahead, take it. I've got a million of them. So thank you, my trading warrior brother from India, in giving people another view and another way to skin a cat. And I saw many successful flow traders have their clerks on the side of the trading pit making X's and O's for them or running over to them when they got those breakouts, and those guys are left in Rolls Royces. So I appreciate you showing another way for people to go besides what we usually see with candlesticks and bar charts.
Yeah. Thank you very much for calling me on your webinar and giving me an opportunity.
It was a pleasure meeting you, my trading warrior brother. Everyone, that's Prashant Shah. You could follow him on Twitter at Prashant Shah 267. You can go to his website, www.defineedge.com, and you can buy his book and learn to be an X and O guy just like Prashant. So thank you again, Prashant. Thank you, Faith.
Thank you very much.
See everyone for Turnaround Tuesday. Good hunting the rest of the day. And remember, don't just count your pips, your blessings. See everyone tomorrow. Thanks one more time, Prashant.
Thank you very much.